hop into this credit report that we were just looking at from the beginning. We're gonna go ahead and show you of how to build your credit to 800 by looking at this credit score. Okay, perfect. That's where I need it. All right. So essentially, as you can see right here, this person's at a 696 credit score. We know that's not good. He's shy of 700, which is not bad. But there could be some things that he can be doing better. So let's take a look at his credit. Let's see what is it that we can find, or I will find, to be able to help him increase his credit. So let's see. So right off the bat, his credit utilization, which is this line right here, is at 23%. That is very excellent. You always want to be between that 10 to 20% when it comes to your credit, because again, it takes account into, again, like I said, on the credit algorithm, amount owed is very important, and credit utilization is one of those, making sure that you do not exceed that 30%. So off top, what he's looking at so far, so great. Let's go ahead and continue and looking to see. Okay, so he had a mortgage, which is really great. He paid it off. He had it with Wells Fargo. That I've looked at so many of these, I understand what that is. And it's a mortgage. He paid it off. And essentially opened in April, closed in October, most likely to take advantage to get that low interest rate. All right, so let's see. So that's at least 10 years of history that he has had right there, but then it stopped. All right, so for the active ones, so right now he has 2023 recently opened, which this is most likely affecting his credit score, because this is a new credit, this is a new loan that's reporting. And when you have new loans, what it does is it lowers your credit age. So for an example, let's say if you have 5 years worth of history and you grab a new loan, what that does is essentially lower your credit usage, because now you have something that's repeating more recent. Does that make sense? If it doesn't, comment below and I will answer it more in depth for you. But that's essentially what is happening. So he got, let me see, he's had, in the last 3 months, he's opened 3 new cards, which will affect your credit age when it comes to your, credit score. So opening a lot of new accounts can affect you, and that's probably what's driving here. So let me see. So he's opened this in 2023, 2021, almost 3 years, recently new. So that's definitely what's killing his credit score. Let's see, another new account. So, and does he have any installment loans? Nope, these are still credit cards. These are all credit cards he's had. Here's a credit card that he's had for a long time. Again, he's at a 23% utilization, so definitely nothing for me to point out on here. Again, he has a really low credit utilization. It's just he's just opened a lot of credit cards within a short period. I would say if you open something within like a year, multiple accounts within a year, you'll see it start affecting your credit score. So far we got credit age is affecting him. Let's see. Here's another recently new account here. So he has a lot of lines of credit. He probably has like over 50. I did not count this and definitely do not want to count this. Okay. Right here. These are his installment loans. Okay, his lack of installment loans also. It's very important to have installment loan. Again, it shows that credit mix, which again is very important when it's helping you build your credit. But again, depending on how high you, how much you borrow, it can affect it and decrease it. So it will be like working against you and not at the same time, which is very odd how they go ahead and do that. So essentially We know so far what is affecting his credit score is pretty much, it's just his credit utilization and his credit age and lack of installment loans is essentially. And here's a key indicator that can go ahead and tell us also why his score is the way it is, which helps us indicate why or indicate how we can help him increase his credit. So, okay. So right here, he's had serious delinquency. So at some point, because again, we can't see, it looks like I didn't get that loan that he had, and that's why it's very, very important to always have an accurate credit report. Yeah, I'm not seeing an account that he would pass due. Most likely I didn't grab it, or it's been too long. But at some point he did have a serious delinquency. That's normally pretty much when you go 30, 60, or even 90 days, and so on, past due. That's contributing to why he has a low credit score. So it's going to take some time, depending on how long he's had it, for it to stop affecting his credit. The next one, we talked about it. Portion to balance to credit limits is too high. That is just referring to his credit utilization. The system, this FICO score 8, is indicating that his credit score is that low because his revolving utilization is too high. So maybe he needs to go ahead and bring this down to 10% in order to get there. And then here, so that was one I pointed out about well, I did say his credit utilization is fine. So, but the system is saying it's not. And here it is. Length of time accounts have been established, which comes back to the recently new accounts. It has decreased his credit age, which again counts for your credit score. And then here, lack of recent installment loans. See, so it's wanting him to have that credit mix in an installment loan. And again, you don't need to get something that big when it comes to an installment loan. It can be just a $3,000 loan. Like what I like to suggest people to do, here's a hack that you probably never heard of. If you need installment loans to have that credit age mix and you can afford the monthly payments, what I do is take out a loan and pretty much pay it off 90%, or pretty much enough to have 2 years of monthly payments. So it's essentially just use that money to help you build credit. So let's say if you pay it down to $1,000 and that's all that you owe. So what's going to happen is that your credit score is going to take a dip because again you're adding new debt, which again counts for the second most important thing when it comes to your credit. But if you immediately pay it down 95%, it's going to reflect the next month and increase your credit. And then if you just have automatic payments with the money that's remaining for at least 2 years, you'll start increasing your payment history. So that's what I like to suggest people to do. So nice little hack for you people when it comes to that. And yeah, that's essentially it when it comes to this credit report. So if you are within the 696 and maybe within this type of situation, definitely by decreasing your utilization, having more installment loans, having a installment loan, and just letting those accounts get older is going to help you get to that 800 credit score. I told you I'm going to help you and get you there. That's why you gotta be on my page. Subscribe. Stop playing with me. Like, I'm a pro for a reason, baby. Look, huh? Shoot.